I've been away for a few weeks for the holiday period. I'm quite glad I was actually out the market last week. It's been very choppy. And we're basically in the consolidation period. Okay, there's a bit of, I wouldn't say unease in the market, but we've had some decent sell-offs, especially in the euro, and then the market is uneasy about what the next direction is going to be. And because of that, we've had sort of long periods of consolidation or choppy price action. Now, this is, I believe, to be combined with low liquidity in August, the holiday period. Also, we've had the Olympics. If you've ever been watching Bloomberg or CNBC, and they're interviewing sort of bank traders, you'll notice that most of them have got the Olympics on in the background. So the focus has been away from the market to a certain extent. A lot of it's been news driven. Because of the low liquidity, we've had very quick moves, and trend followers or people that are purely following trend indicators are going to get chopped up because the market is moving quickly. By the time your indicators are kicking in, the majority of the trends are either gone or it's hard for you to get on that trade, and you're getting quick reversals as well. Okay, I mean, looking at sort of weekly charts, we've had a little net change on most of the dollar pairs last week. Cross currencies haven't been particularly favourable. There's been verbal intervention. We had obviously Draghi before I went away on a holiday. It was bullish about the euro. Don't bet against the euro. He had this massive spike up, and then he did absolutely nothing at the meeting, and then we had that sell-off. So what we're going to look at today is I'm going to talk you through the indicators that I use. I'm going to talk not necessarily scalp trades, but we're going to talk about sort of getting into short-term trends. Okay, so trying to read the bigger picture. Still looking at the bigger picture, okay, on the major currency pairs, but then trying to trade these intraday moves, and looking at candle formations, having a look at resistance levels. Might even start looking at points of control on market profile a little bit. Everybody else got sound? I'm reading that I've got sound. David's just saying that he hasn't got any sound with him. Okay, thanks, Mike. And basically trying to, my ambition and most people's ambition is to obviously get onto a trade, try and bleed a trade. But it's also about money management as well. So I'm going to talk to you a little bit about how I try to build positions, but how I'm also very wary about locking in some profit in these consolidating markets to try and bank some and then run a balance of the trade. So we're going to try and get into all these things today. Okay, first of all, the first chart I've got up is cable. Okay, I've taken the Ishimoto cloud off because it might confuse matters and there's too many lines on the chart. So we're basically just going to purely look at price action at the moment. Now, going to the weekly chart, one trend indicator that I use, which I think is very good to inform you of consolidating periods, is the RSI. Okay, there's two settings here. I've got an RSI 1 and an RSI 2. The RSI 1, which is the top one, is on a 15 setting, which is married to my EMA lines on the charts, which is the blue and red lines. And the next one is an 8 setting, which is a quicker trigger. Okay, and I'm looking at overbought and oversold areas, but I'm also looking around that 50 line as well. Okay, because if we trade around the 50 period for a period of time, it warns us of consolidation. And if you look to the bottom of this chart at the moment, you can see that we're basically bang on 50 on both of these RSIs. So it's showing an area of consolidation. Okay, the weekly chart, well, we've made higher highs. Okay, and we've got upside price action sort of capped by 157.68. So The medium-term bias looks to be forming an ascending triangle, which has a basis to break to the upside. But because of the choppy price action, okay, we just want to try and get intraday moves to get on these short-term trades. Okay. Just note last week's price action. I was talking about the fact that we're consolidating. Okay, spikes bought for the last 3 weeks. Okay, so it's showing that these dips are attracting buying interest, but it's also showing last week that the whole range was inside the preceding week's candle formation. Okay, which is basically an indecisive candle. So we can use all these different candles in all different time frames. The ones that I like to use the most are indecisive inside candles, or aramis, excuse me, or the bullish or bearish outside candle. Okay, and by that I mean that I want the candle to fully engulf price action from the previous week or hour or day or even 5 minutes. So daily chart, we can see it a little bit better. Just if you're wondering what these shadowed yellow boxes are, they basically show me on this chart package whether or not we have a reversal candle, okay, an outside or an inside bar or morning doji star, etc., or continuation patterns. And the moving averages, we've got to be looking at the moving averages as well. Okay, so we've got still a period of consolidation around 50, and the moving averages are starting to tighten up. So that's basically showing that there is no trend. Okay, because the way that the moving averages are formulated, obviously, if there is no trend, then they start to come together. Okay. As we start to trend, they move away or they open the mouth. Okay, some people use what they call a crocodile format with moving averages. They put loads of different moving averages on a chart, and as the moving averages move away from each other, as the trend builds, okay, then the crocodile is feeding and the mouth is open. Okay, as it starts to non-trend, and again this can be used in all time frames, as it starts to non-trend, then these moving averages come back together, and the crocodile is not feeding, okay, or non-trending as it closes its mouth. Okay, so again, daily, we had a doji day yesterday. Didn't really give us much indication of further price action. We had a small buy-in yesterday, but it didn't produce much at the end of the day, basically. Okay, so then we break it down into time frames, and the time frames I'm looking at, okay, I've looked for weekly, daily, 240 minutes, and then 4 hours. Now, we want to be looking really for reversal formations on the higher time frames. Okay, so also we had this very bullish candle which took us up. We then had a dip lower, which looked like a flag formation actually yesterday, which instigated our buy trade. Okay, and then we broke the flag, but then it stopped, and it's now forming this upward wedge formation. Okay, and a wedge formation has a bias to break to the downside. So again, I'm breaking it down through time frames, and I'm looking at this top trend line. So we pushed higher this morning, okay, but we were restricted by this top trend line, and then we start to move lower, and then basically I want to get it down into shorter time frames, and I want to get some sort of confirmation. Okay, so I want to look for impulsive and corrective moves. Now, impulsive moves are quite easy to see. Okay, so it's a move aggressively in one direction. I haven't got it on this chart package, but IG charts, IT finance charts, pro real time, they have an indicator on there that gives you an angle of attack, or an angle indicator. And you can see just visually that if I was to draw a trend line down here, so obviously this is an impulsive move to the downside, and then this move higher is corrective. Okay, so we can see the angle of attack, and then we want to be using our fib levels. So we're building a picture. Okay, that's the main thing in this short-term analysis.